What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm going to be doing an update on BABA stock.
I got the cash in the bag, stadium packed. Born a rock star in this life, gonna live it up.
And in today's video, first of all, I will show you where we are on a price chart and how we get there. Then I will continue with the fundamental news that might be the driver of its upcoming movement to the upside. And at the end of this video, I will share my thoughts and my technical analysis. And I will show you what should we expect next. So let's start with the price chart. I made my previous video right here. At this point, when this asset hit the range of support that I marked previously of $88.04 mark, and my main assumption was that probably we completed this retracement from its swing high of $121.5. And my main assumption right here was that we might start to accumulate our long position with a tight stop loss slightly below this previous bottom, which implies not more than 3% of potential losses with about 11% of potential gains. And right after that, as you can see, this asset formed some interesting pattern, and somewhere here I can tell you that we already had something like a descending triangle, and this pattern usually breaks to the downside. This means when you can see this type of patterns with the retest of lower range of support, on a third or fourth time, eventually this range should be broken. And as you can see, we broke it with the third attempt. And right here you could leave your long position with the lower range of losses. So it is just technical movement, and I have to say that with this tight stop loss, even at this point, we saved about, let me show it to you, about 5% of our portfolio without any problems. So, and let me show you the news. First of all, I want to pay your attention on this article that was published just several days ago on TipRanks, and it says Alibaba stock benefits could outweigh risks. And let me quote you this: Alibaba's financials are healthy and management is focused on returning cash to shareholders. Despite valid risks, the stock's current undervaluation points to notable upside potential ahead. And right here you can find that the main downside for this stock is the risks directly related to the Chinese Communist Party and its pressure on the tech giants, and we can see this pressure for a couple of years right now. And definitely it is the main risk for Alibaba right now. But the upside potential for this asset is quite massive. And the main point of this article is that one of the major fields when we can see the growth of this company is their cloud-based service. And definitely I've told you about this multiple times, that cloud service of Alibaba is extremely important not only for the company itself, but for the entire Chinese economy, because with this service, basically it is the third service worldwide with this type of growth potential. First of all is definitely AWS from Amazon and Microsoft Cloud, and because of this, definitely we might anticipate the relief in the pressure from Chinese Communist Party on tech giants in general and on Alibaba in particular. And this will lead to much higher prices, because Alibaba has quite strong fundamentals, and right now they are extremely undervalued. The price where we are right now is exactly the same. Let me switch to, for example, weekly time frame. Is exactly the same that this asset had back in 2016 or even 2015. And definitely these low valuations for this company might be extremely lucrative in the long-term perspective, and that's why we have to be prepared for this. On top of that, let me show you this article that was published on Yahoo Finance on March the 7th, and it's titled "A majority of Asia businesses expect to increase cloud investment in 2023." And let me quote you these bullets: 4 in 5 businesses in Asia are planning a full cloud migration by 2024. Security, local support and pricing continue to drive public cloud adoption. And one of the leaders in this Asian market of this services is definitely Alibaba Cloud. And I will put all the links on these articles in the description below. You can read it by yourself in order to make your own conclusion and in order to know what should you expect in a medium and long-term perspective. But for now, let me show you that right here you can see that because of this bullish forecast, we still have about $148.23 as an average price target from TIP ranks, and it implies about 64.8%. And if we take a look on marketbeat.com, we can see even higher price target, higher consensus analyst price target at $148.13, which implies more than 77.6% of upside potential from current levels. And I have to say that we can find even more evidence that this asset might be quite lucrative in the long-term perspective. On the list of their institutional investors, you can see that some of these companies reduced its position, and some of them even reduced it heavily for more than 63% and more than 80 and even 88%. But other companies, and I have to say that other major investors in this company, slightly increased or hold their position strong. And let me show you that Vanguard, one of their branches, on March the 3rd filed this information that they hold strong more than $20.5 million in value in Alibaba shares. On top of that, they slightly increased their position with another their branch, and they increased its position by 1.73%, and the total value becomes almost $77.5 million. Another position with this Vanguard branch increased by 0.39% to $217.24 million. Right here, increase of 0.19% to almost $875 million. So, when you can see this type of price action, when you can see that one of its major shareholders hold strong its position or slightly increase its position, definitely it might be a very good long-term sign for this company. So, and let's continue with the technical analysis, but before we dive deep right here, please subscribe to my channel, hit notification bell and hit the like button. This helps me a lot. So guys, what should we expect next? Let me show you in details the latest movement of this asset. And right here, as you can see, we broke this previous swing low, and my main assumption on my previous video was that we pretty much completed this entire retracement. And we have two possibilities. First of all, I could make a wrong breakdown of this movement to the downside, and second possibility that this was the broken pattern. Definitely in trading, nothing can be guaranteed for 100%, even for 80%. And this means we might see a lot of broken patterns. When you can see several obvious signs that the asset hit a range of support and it completed its retracement, most likely we might see the movement to the upside. But instead of this, it formed another bearish pattern and go lower. And because of this, definitely we should be very cautious, and we should enter the position with the tight stop loss. And what should we expect next? Definitely the next range of support might be about at about $81 to $80 mark, because previously we have, let me switch to daily time frame. Previously we had a lot of price action around these levels at around $80 mark. Even on a weekly time frame it will be visible even more clear. And right here you can see this range, and we have a lot of range of support at $80 right here back in March 2015, and we have this range as the range of resistance, and on top of that we have the recent price action that has exactly the same range of support. This means $80 mark is the confluence in between these ranges, and might be a range of support for the current price action. And what should we expect next? I definitely suggest you to be extremely cautious, because this range should hold, and we should see a bounce to the upside with a highly increasing volume. As you can see, with this movement to the downside, we had a diminishing volume, and this means we cannot rely on this consolidation phase as the beginning of the new uptrend. And it happened exactly as in a textbook, and that's why the next movement to the upside should be with the highly increasing volume, and we shouldn't break, we should form something like this, we should hit some range of resistance, then we should have a bounce, then we should break the crucial ranges of resistance, and we should break even swing highs. And when we will see this type of pattern with increasing volume, definitely it will be a sign that you might accumulate your position on a safer territory with the tight stop losses. So I think from the technical standpoint that's it for now. If you like my video, please hit the like button and subscribe to my channel with notification bell, and see you guys and girls next time. Bye!
I got the cash in the bag, stay